Morning, everybody. It's Brian. Today is Wednesday, July the 29th. Yeah, 29th. And here for just a quick live update. What we're going to do is just run through the markets real quickly, talk about things that we're seeing that's coming up in the news that we should be aware of and that might drive some trading decisions today, as well as run through the numbers on what we're looking at as far as key levels on the futures market. Talk briefly about forex, then we'll get going and let you guys get out of here and start watching your own screens, your own markets for the day. So let's go ahead and jump into it. First things first, there is some news coming up today. It's a pretty busy, high impact news day. We've got first thing out of the gate at 10 a.m. Eastern, 9 a.m. Central is the pending home sales report, which is seen as a leading indicator as to the health of the overall economy, followed by crude oil, followed by at 2 p.m. Eastern, the FOMC announcement, the statement, and then the press conference. So it'll be interesting to see what really comes out today, but be aware. All eyes really are going to be out here. I have a feeling we'll see some reaction early around home sales and oil, but the real potential catalyst will be out here at the press conference, depending on what comes from this and what blurbs or sound bites might be communicated during that press conference. So today is a great day to exercise patience, care, and caution, which you should do every single day. You shouldn't reserve that just for a day with a potential high impact news. But if there ever were a time that you really needed to do that, today's a great day for it. Hair's looking like a crazy person's hair. Anyway, it doesn't matter. So long story short, here, watch. There's some high impact news coming. It could create some really volatile conditions in the market, across markets, not only in forex but also in our indexes as well. So be aware of that and don't get caught up in trying to front run what you think is going to come from the news. That's number one. Number two, if you're not in a position and you suddenly see that increased volatility, don't let the fear of missing out drive your trading decisions. If you're in from a certain level and you've said, hey, this is a key level and I've sold from here, I've bought from here, whatever it might be, and you've got that trade on, fine. But don't get caught up. Oh my gosh, it's moving, it's finally going short, I need to jump into this. That's the wrong reason to be in a trade. So and be aware that on really volatile days like this, we might see it all of a sudden dump short, and then all of a sudden, or just as suddenly start buying and have a moonshot, if you will, where it just goes straight up. So no one knows what's going to happen today. There's going to be a lot of speculation on the news as you're watching. Pick your favorite news channel and reading the blogs and looking at Twitter and whatever. Everyone's got an opinion about what's going to happen today and how it's going to come out and yada, yada, yada. I'm going to reiterate the fact that no one knows the future. No one knows what's going to happen. They're all just speculating, just like you and I are in the marketplace. We're speculating, right? Everyone's just speculating as to the outcome of what's going to happen in this news today. But the reality is no one actually knows. So that all you can really do is trade a specific plan. You've got a system, you've got a plan, you've got rules for your entry, rules for your trade management, rules for your exit. The only way that you're going to win in this game is to be consistent and follow that. Follow something that's quantifiable, not what someone thinks is going to happen or hopes is going to happen or says is going to happen in the future, right? All we can do is follow our system. And I know I sound like a broken record because I say it every single day, but honestly, it's what it's all about. If you're coming here looking for something new every single day, there's not going to be something new every single day. This is the same message I've been saying since 2008. Same message I've been saying since 2012. The same message I've been saying since 2015. I say the same damn thing every day because that's all you can do to be consistent. If I'm coming up with something new every single day, giving you a new plan, a new strategy, a new this, a new that, I'm just as fickle as every other person out there that's trying to sell you something that's not going to get you anywhere. And I'm not selling you anything. So I'll tell you the truth. So anyway, sorry about the soapbox. What does all that mean to us? It means there's freaking news coming up. It's high impact. It could be market moving. Market may react to this. I don't know which way it's going to react. No one does. So trade your plan. Have a plan, and trade that. And maybe your plan is in a mixed position like ours is today. Then you don't do anything. That's okay. Okay. The winning the game is about consistent actions, right? Consistent base hits, getting on base, getting on base, getting on base, getting on base, and eventually the runners start coming in. If everyone walks up swinging for a home run, you're going to have more strikeouts than not. If you strike out enough, you're done, right? So same thing in trading. The challenge is if you strike out in trading, you don't have an account to participate anymore. So anyway, sorry about the soapbox. Let's get back over here. So what are we looking at this morning? Well, over here in Forex, we've got a strong pound again. Pound's moving to strength. We've got the USD that's moving to strength. And, we've got the euro here that's kind of a weaker currency. Over on the euro USD, the euro USD, not one I would typically even look at, but we've got the US moving to strength, the euro moving to weakness, so the euro USD is selling off. We've got moved about 57 pips and averages about 80, 80 to 90 almost here. So there's some potential opportunity there. Could that move the additional 60 pips? Yeah, it certainly could, and it could even move more. Does it mean it will? No. Also, because we've got news coming up and just a little bit here, this may stay kind of range bound leading up to that. I mean, it doesn't mean it will, but it certainly may. In fact, a lot of things may stay kind of range bound leading up to these next big news events for us. So, for what we've got here, we'd be looking for either, a U.S. or a pound cross pair that we could trade in order to get us into something here. So we could be looking at, as I mentioned, the euro USD. It's moved 60 on an average of 80. That's potential opportunity there. We could also be having a look at the pound versus the euro versus the pound. So the euro pound, that one's moved 50 pips though on an average of about 60 something. So not quite as attractive there. So we'd X that one out. That's not really an opportunity. It's I'll pull this over here. I'm looking at two screens and you're only seeing one. So it's moved 48 pips on an average of 63. Nice divergence from what we're seeing here, but it's not setting up as a super great opportunity. So we'll leave that one. Pound versus the yen. It's not, the yen's not as heavily traded right now, but looking at this one, we've moved 70 pips here today. Average is anywhere from 90 to 100. It's close, but there's potential opportunity there. That's about equal to what we'd see with the euro USD as far as range, percentage of range moved and percentage of opportunity there that's left in it. US versus yen typically isn't a real good pair to trade. The US and the yen typically moves right together, and even though we're seeing some divergence early in here, it's already moved 44 pips and the average is about 60, 57 to 60. So again, opportunity, maybe not. I mean, there are days it's going to move more, but I'm not really seeing it. So what I'm getting from all this is I just go through here and I look and I kind of do this, is there's not a ton really happening. Probably the biggest one, if I just scan over here and I just scan and look at the currencies that and what they've moved so far for the day versus their typical averages, I'd say the ones that we really have the most opportunity in would be the euro versus the CAD or the CAD versus the yen. Those would be the ones that probably have the most opportunity. I mean, the euro versus CAD, we've moved 44 pips, and the average is 90 to 100. It didn't move much yesterday, but the average, in longer term, is 90 to 100. So maybe more opportunity out here for the euro versus the CAD. Both of these are actively traded right now and will be for the next few hours. So I like that a little better than the CAD versus the yen. Although the CAD versus the yen, it's moved 21 pips and its average is about 60. So that's both of these have some potential opportunity. Even euro versus the yen over here, but both of those are weak. So euro CAD or euro or CAD yen would be the two I would recommend having a look at, just based on simply, if nothing else, they're where they need to be here, above and below midpoints. And then, you can't see the other screen. On the currency strength indicator, they're in the right direction as far as strength or weakness goes. But then we also look at the ranges, and both of these have moved a fraction of their typical range, which says, hey, there's some potential opportunity there for us. So that's what I would recommend having a look at if you wanted to. Again, I'm not an investment advisor. I'm just a guy on the internet giving you some trade ideas, right? But that's where I'd look over here. Moving on, coming over to the futures market, having a look over here. The S&P, we're still in that mixed bag. 4-hour trend is long. 30-minute trend is short. So if we're looking at bias, 4-hour bias is long, 30-minute bias is short over here. Still hanging around 32.18, 32.20 area. And it's been there for weeks. That's where we've been hanging for a couple of weeks now, right here, 32.18, 32.20. This is definitely a decision point for this instrument. So news could be a big catalyst around getting this thing to move off of here. Which way is it going to go? Only time will tell. So I have a plan around this. I can tell you this plan as we look at, we're looking for a confirmed bias. We're looking for a 4-hour bias that matches a 30-minute bias. And if we're trading that plan, this is mixed. It says, hey, don't trade. Don't touch it. All right. So that's what we do. We just walk away. We don't touch it. There's no reason to get forced into a trade. Maybe you're looking at something very short term. If you're looking at something shorter term, even there, if you're looking at the 30-minute and the 5, those are mixed biases. So even over here, you don't have a trade right now. So just wait, be patient. Whatever your trade setup happens to be, let it set up. But for me, looking at the trade plan that we've been talking about here over the last couple of months now, is we're looking for long bias, we're looking for the 4-hour and the 30-minute to be in the same direction for directional bias. And that's what allows us that's the very first step of starting off our trade. And here, step 1 is missing. I will tell you though, around this, 32.18, 32.20, it's been a key level for us. So if you're just itching to do something today and itching to take a trade, you'd be watching this level, 32.18, as we get into the regular trading session, maybe through the first part of news. Watch and see where this is and see what opportunity there is to either buy it or sell it. But, do it based on some level of a plan that you've got prior to the market starting. So, take the next hour and a half to really think through, okay, biases are mixed. Don't know what I want to do here, but we've got a key level that's been holding up around 32.18, 32.20, and if I just have to make a decision, take a trade around there, think through what needs to happen in order for you to feel comfortable in either buying it or selling it off of that level. I don't know which. I'm going to tell you right now, I would favor staying on the sideline based on these mixed biases. All right. Crude, what's happening in crude? Still a long bias. We've got 30-minute bias is now long, as is the 4-hour bias. Remember that we do have crude news coming up. Not just crude news, but also news on crude. We have coming up here just a bit. So again, probably a good idea to stay on the sidelines at least until you get through the news event and then make some decisions after that. Oh my God, I have to wait until news is so long from now. I want to trade now. No, just wait. Just wait. Give it time. You've got news. Let the news do what it's going to do. See what comes out of it. Don't trade what, and again, this is another thing I've mentioned before. once news happens, you're going to get alerts, in whatever systems you might watch and look at things in. But you'll get an alert if you look at Forex Factory, for example, or Bloomberg or any of those. There'll be the outcome of what that news event is. If you're watching, if you're looking at any other aggregator like Financial Juice, for example, that's going to have an alert at the top that tells you what the oil report came out as. It's really tempting to look at what that number is and go, oh my gosh, that was really positive, that was really negative for this, so I'm going to trade blank. Okay, that's awesome, but remember, it doesn't always do what you think it's going to do. So again, have a plan and stick to that plan, right? Don't worry too much about the outcome of the news. Worry about the execution of your trading plan. And if your trading plan is mixed and tells you to sit on the sidelines, don't trade. Sit on the sidelines. It's all right. Next up, gold. I know for the last couple of weeks we haven't done anything. We haven't had any, these awesome trading opportunities. It's okay. That happens. Rule number 1 is account preservation. Like I said before, if you're always going out swinging for home runs, if you're doing that in trading and you keep striking out, your account's gone. And then you don't get to come back to the game. Your franchise is done. It's out of business, right? So account preservation is number 1. That's why it's so important to know when to trade and when not to trade. I mean, I think knowing when not to trade is just as important as knowing when to push the button and what position to get in at. It's a hard thing for a lot of traders, is knowing that don't take a damn trade. Just stop. Stay on the sidelines. You don't have to trade every day and you don't have to trade every week, and there's going to be times when you just simply don't have a setup in your system. It's okay. That doesn't mean your system is faulty. It's just telling you the conditions aren't right to trade. And I can't, it's one of those things, it's like, oh my gosh, it seems so simple, but it's the rule most often broken, is the capital preservation rule. Gold, over here on gold, strong bias, 30-minute and the 4-hour both long. In fact, we gapped open from the close to, once we closed things down at the end of yesterday's session, it gapped open at the start of electronic trading back here. So this is kind of an interesting place for gold. At some point, gaps typically get filled. Now, when is that going to happen? Is it going to happen? I don't know. But, I would expect at some point for gold to float back down to this, 1955, 1950 area. And then, you could look for potential buys off of this. I would be hard pressed to look at a buy directly, as things get started over here. I'd want to see this float back a little bit down to some other levels before I really look for buying opportunities. Now the next key level on the 4-hour is 1939, 1940. But at a minimum, I would look for this gap to be filled here in order to take a long trade. So that's it. We've hit everything. We've run through it all, and we're ready to go for the day. I say ready to go. There's a lot of news, so maybe ready to go means ready to go out for a walk and do something else, so you're not tempted to sit here, stare at the charts, and place trades that you don't need to be placing. So I guess the long and short of this whole thing today for me is that it's a great day to just see what's happening, but stay on the sidelines. If maybe you've got some sort of a counter trend trade you'd like to do, might be a great opportunity to take a very small position, a very small percentage of your account, and look at some key levels to do a counter trend trade, especially in some of the indexes, based on what might come out during news. But again, it would be more of just a high risk trade, counter trend, not the typical trading method, trading style. But if you just had to do something, set your stop loss at a very small, just given the volatility around news, or the swings could be really high, right? Could be, doesn't mean they will, but it could be really high. So take a very small part of your portfolio and take a high risk trade if you really have to do something. Otherwise, just enjoy the day, enjoy what's happening in the news, see what directional bias that might establish for us moving forward. Right? We don't always have to pick the top or the bottom. We just need to be part of the ride as it happens, right? So, the cool thing about trading is if today is the beginning of the ride and it is changing directions, and whatever news comes out today just totally throws a wrench in the market and the market starts freaking out, and we get some big move, whatever direction that is, we can pick up part of that move tomorrow or the next day. We don't have to be in it from right now. And that's another hard thing, I think, to get, because I know we look at charts and we go, well, if I had bought oil at 6 when it went down to 6.50, I could have been in that right now and I'd be riding all the way up to 41. Oh my gosh, you start doing the math on that return and your eyes get all big, like, oh my gosh, this is amazing. I could have, changed my entire lifestyle over this. Reality is you wouldn't have held it. You wouldn't have held it to 41 if you were in it from 6.50. The likelihood of that is be honest with yourself, So anyway, it's easy to look back at all these, definite tops and definite bottoms. They're so clear to see when you look historically, but we're not looking. We're trading that hard right edge. So we've got to do things that have a systematic approach to them and have a quantifiable reason for us being in the market or taking an action. So, whatever your trading plan is, I'm not saying you have to use the one that I'm laying out for you. Whatever your trading plan is, make sure it's got that quantifiable approach and then utilize that day in, day out, day in, day out. All right? So that's it. I'm going to get out of here. If something happens today, if the stars align and suddenly, these directional biases for the S&P end up going the same direction and we get an opportunity to trade during that trading window that we have, then I'll talk about it. I don't expect that to happen today. But if they do, we'll come back in and do a trading update. If not, we just stay on the sidelines, stay happy, keep our account protected, and wait for the opportunity that gives us the best opportunity to have trades that move in our direction. 'Cause that's what we're looking for. We're looking for the best opportunity, not for a opportunity or an opportunity, not for an opportunity, not for kind of an all right opportunity. We want the best opportunity because we want to protect our account and only take trades that have that best opportunity to get us into some sort of a profitable position. And even there, it doesn't mean all those will win. But if we only trade the best ones, we have a much better probability than we do if we just take everything that comes our way. All right, that's it. Have a great day. Bye.